Hi, this is Stan the Annuity Man. Today's topic is a biggie, and it's timely, and everybody's asking me this. How do interest rates affect annuities? Now, you just can't say they affect all annuities the same way because there's different types of annuities. So what we're going to do is we're going to go through every single type that's out there, and I'm going to tell you specifically how interest rates affect each one of them. Oh, and one more thing. Watch my other video on qualified longevity annuity contract rules, which you need to know if that fits in your IRA. Okay, we have a ton to cover today. What I'm going to go over is the primary types of annuities that are out there that we're going to talk about how rates affect them. We're going to talk about the interest rate that you need to follow, the primary interest rate that you need to follow that affects annuities. Then we're going to go one by one with each annuity type and tell you how the interest rates and the volatility of interest rates affects each one. Also, I'm going to talk about, can you even time interest rates? Is there a way to do that? And then interest rate strategies using these annuities that actually work. Also, hang in there till the end, because if you do, I'm going to tell you how to get all 7 of my books for free. Okay, so let's talk about the primary annuity types that are out there. You have single premium immediate annuities, which solve for income now. You have deferred income annuities, which solve for income later. You have qualified longevity annuity contracts, which are used inside of your IRA that solves for income later. You have income riders that solve for income later that can be attached to policies. And then you have principal protection type products like multi-year guarantee annuities and fixed index annuities. And you also have variable annuities as well. So we're going to go through all of those and tell you how interest rates affects each one. So people always ask me, Stan the Annuity Man, what's the rate that I need to follow all the interest rates that are out there? What's the bogey? What's the one I need to point to that the industry kind of points to? And it is the United States 10-year Treasury note. And if you follow that, that's kind of the barometer and what the industry is looking at to price the products. Now, each product type is affected differently by interest rate movements. So the 10-year Treasury is the bogey, so you know that. But it affects each type of annuity differently. Sometimes it's a primary factor, sometimes it's a secondary factor. We're going to go through each type and tell you if it's primary or secondary and how to follow it. So let's go through each annuity type, and I'll tell you if the interest rate movements are a primary or secondary influence on that product type. So single premium immediate annuities. The primary pricing mechanism of a single premium immediate annuity is your life expectancy at the time you take the payment. And remember, all annuity lifetime income payments are a combination of return of principal plus interest. But the primary pricing mechanism is your life expectancy. Secondary, interest rates. So with immediate annuities, single premium immediate annuities, the interest rates are secondary from the standpoint of a pricing mechanism. Number 2, deferred income annuities. It's the cousin of the single premium immediate annuity. In other words, it's the same structure, you just defer it differently. A deferred income annuity, the primary pricing mechanism, once again, is life expectancy at the time you take the payment. Interest rates play a secondary role. Next product, qualified longevity annuity contracts. It's a deferred income annuity inside of your IRA. Once again, life expectancy drives the train on the pricing. Interest rates play a secondary role. The next product is multi-year guarantee annuities, which is the annuity industry version of a CD. So interest rates play a 100% role there. That's not a lifetime income product. That's a principal protection product. So it plays the 100% role in the pricing of multi-year guarantee annuities. The fixed indexed annuity, interest rates, it's a little different because with interest rates play a big role because the options that the companies are buying, it's influenced by interest rates. So I would say it's a semi-primary pricing mechanism, but if you attach a lifetime income benefit rider to an indexed annuity, then life expectancy drives that pricing train. So it's a little different. But with fixed index annuities, the interest rates can be primary, a little bit secondary, but if you attach an income rider, then it's life expectancy. And then lastly, variable annuities, which are a market product. So in essence, the way you look at your investment stocks and bonds and those type of things, ETFs, with interest rate movements, The same kind of happens with variable annuities. A variable annuity is a market growth product. So typically when interest rates go down, that's good for the stock market. So in most cases, that would be good for variable annuities. But the interest rate component doesn't affect variable annuities like it does the fixed annuities, like immediate annuities, deferred income annuities, qualified longevity annuity contracts, index annuities, and multi-year guarantee annuities. Variable annuities, it's a little bit of an outlier because that's a market growth product. Now, people always ask me, hey, Stan, can you time rates? No, you can't. Long story short, don't try to time rates because most people are wrong about that. And I had a story the other day. A guy said, well, I think I'm going to wait to buy my single premium immediate annuity until rates go up. First thing I said to him is rates are the secondary pricing factor, it's life expectancy. So if you waited to time rates, you'd have to factor in the payments that you would have missed with the single premium immediate annuity if you bought it right now. Long story short, it's impossible to time rates. I always tell people if the contractual guarantee fits your specific situation, then it's going to fit in your plan and just put it in. You can't time it. The bell doesn't ring at the top or the bottom, as we all know, and that same goes for interest rates. Always remember this. When you're buying an annuity type for lifetime income, single premium immediate annuity, deferred income annuity, qualified longevity annuity contract, income rider attachment, the primary pricing mechanism is life expectancy. Okay, it's not interest rates. Now, if interest rates drastically move, would it move the needle a little bit? Of course it would. But you have to understand that life expectancy drives the train. The reason the annuity companies have the big buildings, the life insurance companies, is they know when we're going to die. It's a guaranteed issue product, and they're grouping everyone in your age group, and they're saying some of you are going to live longer, some of you are going to live shorter, and so they price it to your life expectancy. Do interest rates play a role? Yes, of course it plays a role because all income coming from annuities is a combination of return of principal plus interest, but life expectancy is the primary pricing mechanism for lifetime income guarantees. So what are the income strategies that work out there? Nothing works perfectly, right? As I always say, there's no good answers, just bad sales pitches. Everything has limitations and benefits, but let's talk about some strategies that might help a little bit with interest rates and you being at a point where you feel comfortable that you're taking advantage of either the possible movement of interest rates, etc. So let's talk about principal protection. One of the things I like to do is ladder multi-year guarantee annuities. So in other words, if someone said I have $300,000, I'm not sure where rates are going to go, then what we'll do is we'll buy $100,000 in a 3-year duration, $100,000 in a 4-year duration, and $100,000 in a 5-year duration. That's called a fixed rate ladder. I also do what's called a mixed fixed ladder, which is a combination of multi-year guarantee annuities and fixed indexed annuities. The multi-year guarantee annuities obviously guarantee a specific percentage. The fixed index annuities don't, but they can perform a little bit higher than CDs. So we might do a 3-year, a 4-year, and a 5-year multi-year guarantee annuity. And then at the 7-year level, we'll do a fixed index annuity. That's like a mixed fixed ladder. We also can ladder for income. So if someone says, I don't really know where interest rates are going to go, and I feel they're low, but I still need income, and I've got $300,000. I'm just using that just for easy math. What we do is we say, okay, let's buy a $100,000 immediate annuity today. Let's buy a $100,000 immediate annuity this time next year, and then a $100,000 immediate annuity in year 3. So what are you doing? You're not timing rates. You're almost kind of dollar cost averaging in. And I guess that's just another way to combat interest rates. There's no perfect answers. If you have an idea, come to me with it and we can put together a customized plan to fit your specific situation. And oh, by the way, about those books I promised earlier, here they are. There's 7 of them. I've written 7. I'm a busy little writer about annuities. My whole thing is education. I think that you need to have as much education on these products as humanly possible. I'm going to give these away for free because I am a philanthropist. No, actually I'm not. But I'm going to give these away for free. No cost, no obligation. We won't bother you, bug you, call you. There won't be some eager beaver 21-year-old salesperson showing up at your door. We'll just send it to you and treat you like a professional. If you want to engage us, then you can at StanTheAnnuityMan.com. And here's the other good news. It comes in this gold foil package. Isn't that nice? That's phenomenal. So these things I send to you for free. Now do me one favor. I'm going to do you that favor. Do me one favor. You can click below and get the books. That's where you go. But also join the Stan the Annuity Man team. In other words, I'm doing these YouTube videos all the time. So click below. They're gonna be informative, non-salesy, non-pitchy. Heck, I'm informative, right? I'm an edutainer. Do you agree with me? Shake your head. So click the button, and I'll see you next time.